Hi everyone, welcome back to Upside Down Data. Today I want to talk about a new risk indicator that we've just launched for Chainlink. So if you like the content, remember to subscribe to the channel, give the video a like, and go check us out on Twitter where we post regular updates about our risk indicators for Link, which we've just launched, as well as risk indicators we have for a variety of other assets such as Bitcoin, Ethereum, etc. Okay, so what I want to talk about today is this new risk indicator we just launched for Chainlink. So if you've been following the channel, you're probably familiar with these graphs. So what I'm showing you here is on the y-axis the price of Chainlink, or Link for short, in logarithmic form. And then this is plotted over time, and each dot that you see here corresponds to a day, and the color of each dot corresponds to the output of our risk model. And the risk model that we use, we have called the upside downside potential indicator. It's a model that we've created here at Upside Down Data. And it ranges from 5, which is signaling high risk, that the upside potential has been tapped out and there's much more downside potential at that given point in time. And -5 indicates low risk, when the upside potential far outweighs the downside potential. And what you see is that the UDPI for Chainlink is quite good at calling out these hot points, these high-risk zones that preceded big corrections, as well as these bottoming out points, these green zones where historically accumulating here is advantageous. It usually precedes these big runs that we see in Chainlink's price. Now, one of the things I want to talk about with the UDPI and kind of one of its features, one of its behaviors that I think is interesting and worth talking about, is how it deals with these kind of extreme black swan events, like this massive crash we saw here due to COVID in March of 2020. So, price had kind of rebounded from this lower risk zone here. It had moved up, getting a little bit risky, but nothing super concerning quite yet. Then we had this black swan event, this thing that no one could have seen coming, COVID, crashing financial markets around the world, including a lot of crypto assets also crashed along with it. And in a situation like this, where you get this crazy fall from, around $5 all the way down below $2, to $1.50 or so, a little higher maybe. When you get an event like that, there's a lot of uncertainty about how far that crash is going to go. While that was happening, no one really knew how deep that correction was going to be. And so the way that the UDPI handles situations like that is it will start updating, but it really waits until it gets confirmation that the bottom is in before it flashes these really low risk readings. And really what that's telling you in that moment is that as the crash is happening, the UDPI isn't really quite sure how far the crash could go, and so it doesn't want to tell you, that it's really low risk already, because it could be wrong, and it doesn't want to lead you astray. It doesn't want to tell you that the bottom's in when the bottom's not in, because then that can be devastating. You don't want to be investing in an asset and then have it crash another 100, 50%, have it crash massively beyond that. So what it'll end up doing is this will happen, and then as we kind of built up support down here in this around $2 range, then the UDPI became a lot more confident and then suggested, okay, I've seen enough, the bottom's in, the downside potential is tapped out, and the upside potential now is far outweighing the downside potential. And then sure enough, once it flashed this deepest green, that kind of preceded this big run that we had that ultimately led us up to this peak we saw in August of 2020. And Link actually did a 10x from here, from this $2 range up to here, which is about $38, or excuse me, $2. This peaked up here at about $20 up here. So it did a 10x move from here to here. And so if one had been following the UDPI and had bought at this point where the UDPI became quite confident that the bond was in, one still would have done very, very well. One would have, 10x their money from here to here. And really, the reason I think this is a benefit of the model is that it's just kind of taking a cautious approach to these extreme events. It's not going to flash a deep green, a really low risk before it's sure that it actually is a really low risk time, because there's nothing about this crash that said it had to stop at $1.50. The model's basically suggesting there was still downside potential, that it could have realized potential. It could have gone a lot further. And so it was waiting until it was more confident the bottom was in before flashing that dark green. And so that's something I personally like about this model. I think it's an advantage where it's not likely to be flashing these deep greens unless it really does seem to be at a bottom, when it's unlikely that there's much more downside potential to be realized. And that's kind of historically the way that it's played out. So another way that we can look at the UDPI for Link is just to look at the raw output from the model. And so I have that plotted now. So on the y-axis, I just have the UDPI level. So, -5 low risk to 5 high risk. I've left the color coding in, but that's just a visual representation of the levels. Dark red corresponds to these high levels of risk, and dark green low levels of risk. It's just a visual cue. It's the same information that you're seeing on the height of the line. And so what you can see is that what the UDPI will do is it'll really kind of be spiking up to these high points during these risky times in the market. And then it'll really be bottoming out kind of down to these low risk zones when it seems to be historically good times to buy. And so this, for example, was the COVID crash in March that we were just talking about. So this is where it kind of got confirmation of the bottom. And then sure enough, we ended up going on this massive run up to $20, and a 10x move from here to here. And then again, it called the big move up in February that that Link did. That was another big one. I think that was a 5x move. If you would have bought at this point in 2020, this was around September, October, up here into February of 2021. That's about a 5x move. And then it actually showed the summer, where we just were not too long ago, as being a fantastic time to be buying Link. It was suggesting that that was when the downside potential had really gotten tapped out. It wasn't likely for things to fall much further. And then we, sure enough, went on a run that was between a 2 and a 3x move from here to here. And so, had you bought heavily in the summer, then sold off some up here, you would have done quite well for that very short period of time. And currently, where the UDPI level is kind of down here, a little bit above 1, kind of in between 0 and 1. And so what that suggests kind of currently is that the upside potential still is outweighing the downside potential of Link in this current moment. So we had this big run in these high risk levels, but now we're back to a place where the upside potential actually seems to be greater than the downside potential. And so, not financial advice, but if one were considering whether or not to enter and buy Link now, the model suggests it's not a horrible time to be considering that. It's kind of an asymmetric trade in one's favor. So again, do your own research, but that's what the model is suggesting. Now, one thing I want to talk about as well, so we actually put out a video earlier today where Joe was talking about how you can use these risk indicators in concert with risk indicators for other assets to really try to kind of maximize ROI, maximize return on investment in crypto investments kind of generally. And really the main idea, I recommend you go watch that video. Joe goes into a lot more depth, but the main idea there is that once an asset has kind of hit these really high risk zones, then you usually want to kind of be getting out of that asset. And one approach you could take is to just hold that money in reserve and wait until the asset gets back down to low risk zones and buy back in. But that might not be always the best, because there's an opportunity cost by waiting that long that you could be missing out. And again, there's nothing that says that the risk level for this asset has to go all the way back down to these green zones. There could be other things that keep it kind of in these middle grounds. And so one thing that I want to talk about is if we went back to this point in time, so this move from March up into August, and then what was going on after that, and then if we'd had access, if one were to have had access to UDPI charts for a bunch of different assets, what might it have suggested that one could have done with these profits one had just made up here, and then what would have happened if one had moved profits from, in this case here, Link, into some other crypto asset and then left it there. So an interesting comparison I think there is to draw is between what Link was doing during that time, between the COVID crash up into August, and then kind of what came after that, and then to look at Cardano, ADA, and what ADA was doing. So ADA is another pretty popular crypto asset. And what we can see is if we draw a line just straight through here, when we had this peak of the UDPI for Link, so that's when it ran up to $20. When you probably want to be, if one were following these models, one would be wanting to exit the Link market for sure at that point. And then let's say that one was just looking at other UDPI models to see, where could we move this. So if one had access to UDPI models for both Link and ADA, I should clarify, we have a UDPI model for ADA, so that's where this data is coming from. This is the output of the ADA UDPI over time. It just so happens that Link and ADA are similarly aged assets. They have similar age history, so they're pretty nice ones to compare in this case, I think. So basically, if you had sold off, if one had sold off Link at this point, one might have looked over at the ADA UDPI and said, huh, it's actually below zero right now. ADA had not put in this crazy move like Link did. ADA was still, relatively low risk. It had moved up since the COVID crash, but not excessively high like Link had, not kind of unsustainably high. And so the risk level was actually falling at this moment, while the risk for Link was really peaking all the way up to kind of almost at maximum. So if one had decided to take these profits and then start putting them into ADA, so maybe one either just dumped it all in at that point. I think ADA was trading for about 15 cents at this point, or one could have just dollar cost averaged into ADA across the next month or so, and then that would have actually been an average price of about 10 cents if one had done that approach, because there was a bit of a correction that ADA had in going into September and October, where it fell down to closer to 7-8 cents. So there would have been a kind of an average buy of around 10 cents, most likely, if one had taken these profits and average in here. Well, then what ended up happening is going into February of 2021, ADA actually did, from this point, if one had just dumped all their money in at 15 cents, it did a 10x from 15 cents. It went up to $1.50 from here to this point up here. And Link, if one had taken a different approach and just taken the profits out here, put it all in Link here, Link was at about $7 to $8 here, what ended up going up to $38, so about a 5x move. One would have only made a 5x move here, sitting on this for a month and then following this. Whereas, one would have made double that in multiple. One would have made a 10 or even 15x if you would have dollar cost averaged, one would dollar cost averaged into here on the already profits of 10x from here. And so that's really the power of having multiple UDPI indicators to look at as we go through these bull runs. Because what you can do is that once one asset that you might have had a position in does a crazy move like this, does a 10x move in the case of Link from the COVID crash up here, into August. And then if one had taken all those profits, put it into ADA, which hadn't run yet, with at lower risk levels, and then let that run into February, one would have taken a 10x move here, and then 10x it, or even 15x it again here. And that is how you can really maximize your ROI. That's how you can really make real money in the crypto market. So again, not financial advice, form your own strategies and form your own opinions. But the idea here is that having these risk indicators for multiple assets, and then being able to look at when one of your assets is kind of peaked out on its risk, where to move into a lower risk asset later, you can really stack those profits, and it becomes exponential. It becomes a little bit crazy, the ROI that you can get by flipping between these assets based on what their risk levels are, whether one has run yet or not. And so for me personally, that's what I'm going to be doing this bull run that we're likely kind of gearing back up into, is that it's going to probably be the case again where certain assets I have positions in are going to run early. They're going to run before some of the other ones. When that happens, I'll react. I'll look at the UDPI levels. I'll take profits as those go. I'll move them into the lower risk assets and ride those profits as well. And so that's what we're going to be talking about on this channel. And so if you want to be getting these UDPI updates, follow this channel, follow our Twitter. We'll be doing regular updates, and then you too will be able to look and see, where are the risk levels and what might that be. So again, none of this is financial advice. Form your own strategies, form your own opinions, but that's just personally something I'm going to be looking for as we navigate this bull run. So to wrap up, I want to talk a little bit more about just where we are right now with the Link USD UDPI. So currently we're actually sitting below zero. We're at negative 0.65. And so again, as I mentioned before, this suggests that the upside potential is greater than the downside potential for Link right now, or at least that's what the model is suggesting. And so we kind of had come down. We kind of bottomed out here in the kind of the middle of October recently, but then Link has started to show a little bit of strength more recently, so the UDPI has been ticking up a little bit to reflect that, but it still hasn't gotten to anything near a concerning zone yet. And so Link is still looking like at a pretty healthy point, has plenty of room to run if it starts to really move. Alright, so that's all I really wanted to talk about here. So thanks for checking out the content. Again, remember to subscribe to the channel to keep apprised of the UDPI levels and other content we'll be rolling out. Make sure to give the video a like and follow us on Twitter for daily updates about UDPI levels. And remember, with the UDPI, we're all going to make it.